Good morning, traders and investors, and welcome to the weekend update here on May 25th, 2025. So as I had indicated last week, I felt like we were coming into what could be a resistance area. We had high RSI, relative strength, and of course, everything is news driven at this point. And we started to chop a little bit sideways during the week last week, which to me indicated that we may not be going higher, at least immediately. And then, of course, some news started coming out, and that news drove the market down fairly significantly, at least based on recent market movements. Now, that news, of course, is surrounding tariffs, and the news is going to continue to drive the markets. While we did drop right into our 200-day moving average here on the SPX, it's going to be interesting to see if that does, in fact, hold. Again, news comes out that maybe some of these things aren't finalized the way that we thought they were in relationship to tariffs. Right now, we are largely being driven by news cycles. Now, all that said, a couple things to note here is that when we did get that sell-off, it was on a little bit higher volume. So we had our up volume as we were rocking up pretty hard here. We had some big up volume days, and then those up volume days started to tail off. That was also a little bit of an indicator to me last week that we might be stalling a little bit, that the number of buyers coming into the market might be getting a little bit exhausted. We might be a little bit overextended. And then, of course, when we did get that sell-off, the volume in that sell-off day exceeded some of the prior up volume days. Now, it's not a major significant difference between them, but it is a little bit of an indicator. So based on SPX, that's what we're seeing. Of course, SPY is going to be exactly the same because it's just 1/10 of SPX. We saw the same thing here. RSI was at high where things often tend to stall or roll over. And then we also saw that higher volume on the down day. If we take a look at volatility, the volatility index, we did get a pretty significant spike, but it also dropped off that fairly quickly. But we are at some elevated IV. We were back up in that 25 range or so here. That is a little bit of a concern. And again, we're going to have to see where the news plays out on Monday. The Qs, a very similar story there. As I had mentioned, I was expecting similar things with the Qs. We were relative strength was at that high reading mark around the 70 where things often tend to stall or sometimes roll over. And again, just like the other indexes, when we did get our sell-off day, that volume was also higher. One thing you'll note here in the Qs, though, is that the up-day volume is staying fairly strong overall. So that's an indicator that maybe the tech sector might not be as exhausted as the SPY, the overall S&P 500. But again, also news driven. Then we'll take a look at the volatility in the Qs, and we can see that in the Qs, volatility also spiked. It did not drop off quite as much, though. So again, that's a signal is the opposite direction. So we're getting very mixed readings in the market here right now. IWM continues to be weak, where the other indexes were getting up and they were pushing on their old highs. Old highs here for IWM is way up here somewhere. We're not getting anywhere near that in IWM. And the down days that we've had in IWM have had higher volume as well. And IWM has just been a little bit weaker overall throughout this entire year, basically. So I'm expecting that IWM and the Russell 2000 in general is probably still going to continue to struggle a little bit here. Volatility in the Russell did also spike. You'll notice that it is up a fair amount higher. It's almost up to a 30 reading, or was up almost to a 30 reading, where the other volatility indexes were in that 25 range or so. So it seems like there's a little more fear for the small caps also than there is for the big cap stocks in the S&P 500. One of the possible things driving this fear is if interest rates go up, well, all companies depend on being able to borrow money at reasonable rates. Small caps start to get squeezed out. They may not have the credit worthiness in many cases to be able to apply for and get that different funding that they might need for their businesses. And it just puts a lot more pressure, generally speaking, on a small company than it does on the large cap companies. The large cap companies many times can move up their pricing, and because they're so well respected, and people will continue to buy their products in many cases, even if they have to pay a little bit more. Small cap products oftentimes are a little more suspect. They're a little less, they'll be some of the first things that might be cut by a consumer in many cases. So I think that's one of the reasons that we're seeing a little higher volatility and a little more weakness in the Russell 2000 companies. So that wraps up the weekend analysis and update for last week and market expectations going forward. Again, I'm going to say a neutral market here, right now, just because there isn't any clear indicators. Overall, I do think that we're going to see some continued weakness in our markets, my personal opinion, based on some of the things that may still be playing out. We may not be as dialed in as we thought we were on tariff situations. While agreements were announced, I don't believe any of those agreements have actually been inked in writing yet. And as we all know, the devil is in the details. So as we start to dig into those details and start to get those fine-tuned, I think we may see a little more falling out here. Time will tell, but that's my expectations here for the market as of my 25th.